Hong Kong market. That one is up 1.4%, so 260 points higher.
This reopening is much better than even the most optimistic expectations.
The initial rates are coming in there, and the Nifty, well, it's opened up as flat as can be.
The flows to India that we've been seeing are a pro-India flow, not necessarily anti-China flow.
The listing, which is expected to be strong, 15% higher at about 272. That's a 35 rupee pop coming in.
Today, Credit Suisse has gone ahead and upgraded Bank of India to an outperform from underperform, and they've raised the target price there to 105 versus 42 earlier.
If you want to identify cyclicals, first you have to identify consistency.
Halol plant, which is basically Sun Pharma's one of the key plants when it comes to the US, has been placed under import alert.
Very quiet morning of trade, range-bound day, muted action so far.
There could be one more rate hike, and that may be the time for thinking about a pivot.
JSPL has won the bid to acquire Monet Power's power plant.
The BJP has really broken two records. One, they have the highest tally in the state of Gujarat ever.
It's a very listless session for our markets. We're just up close to about 0.1%. That was the day so far. Hello and welcome to Closing Bell. I'm Reema Tendulkar. With me, Sonia Shenoy in the studio, and Nigel is in the newsroom. Good afternoon, guys. Things are picking up, right? The mid-cap index has seen a bit of a pickup. It's up close to about 0.5%. The Nifty bank has gone ahead and hit a record high. Once again, we're talking about levels of 53,550 in the last few minutes.
Someone is eating popcorn, yeah.
All right, in the last few minutes, there has been a pickup in HDFC Bank as well as ICICI Bank. And of course, the leadership is coming from the PSU banking space. The Nifty PSU Bank Index is up 3% for the day. It's up 6% for the week so far. Earlier this week, it was Morgan Stanley, which was betting on PSU banks. And today, we've had a bullish note from Credit Suisse talking about how PSU banks perhaps are offering some amount of value. That said, Sonia, there are a lot of cues that we need to navigate, right? Today, it's also the weekly options expiry. So that's going to be one factor. The November jobs data has also been coming out, the weekly jobless claims in the United States. But next week is going to be a very big central bank action. And that is the calendar in terms of next week. On 13th, you've got the US CPI. 14th, that's Thursday, the FOMC meet, and 15th, ECB and Bank of England. These are influential central bankers, and that they will be meeting next week to decide on the final policy rate hike for 2022. So ahead of that, there appears to be some amount of caution. Though, as I said, things are picking up on the mid-cap space as well as on the banking space. The Nifty bank at a record high now.
Oh, absolutely. And you know what? I mean, it was just a matter of time before the Nifty bank hits a record high, since the markets are already at a high. The range for this market, I think largely we all know it, right? 18,400 on the downside, 18,800 on the upside. And that 20 DMA of 18,459 is something that's holding definitely. But yes, the bank Nifty outperformance, any bank you pick, right? Even in the PSU space, any bank you pick, most of them have hit fresh record highs. So that's something that we'll definitely keep on our radar for the rest of the day. And as Reema pointed out, a lot of big cues next week with the US Fed policy top of mind. But Nigel, someone's eating popcorn there in the newsroom.
That's right. It's smelling quite delicious as well. But,
I think that's the only thing to do, given the market is so quiet these days, right?
That's right. I mean, I couldn't get a piece of it, actually. So that's the only disappointment. I'd rather be in the studio with you guys.
There's no popcorn here, Nigel.
Yeah. So anyways, the market's looking up, actually. Earlier today, we had highlighted the fact that there are shorts in the system, which isn't so bad. And the PCR as well had cooled off to around 0.7 odd. So, that's towards the lower end of the band. And that's why we're seeing a bit of a bounce today on the Nifty itself. But the Nifty bank, that's the one that's playing an outstanding inning. So just a few minutes ago, when we were sending our graphics for the Closing Bell show, I was saying that the Nifty bank is about to hit those fresh all-time highs. Well, in the last 20 minutes or so, we have moved to the all-time high. Just take a look at the intraday chart. The last 30 minutes has been very, very good for the Nifty bank. But the bigger positive is the breadth of the market is still outperforming what the Nifty is doing. So the mid and the small caps, there are select pockets where we are seeing participation out there. Now, since it's expiry today, we're just highlighting a couple of strikes. On the downside, the 18,550 put, well, that's fairly active. The premium has come down to around 7 to around 8 rupees odd. So there's aggressive writing that we're seeing at that level. However, the upper end as well, 18,600, the call over there has seen a good amount of open interest. The premiums come down to around 20 rupees. So just putting both these two strikes in place with their premiums, the broad range is 18,540 on the downside to around 18,630 on the upside. A break of this 18,630, I'll tell you what, could easily move us another 50 points or thereabouts. So keep an eye out on this range. If we break this range, maybe we'll see a quick 40-50 points on either which direction.
Okay, let's tell our viewers what we've lined up for them on closing bell today. The US FDA places Sun Pharma's Halol unit under import alert. What does this mean for Sun Pharma? Details coming up on the show. PSU Bank stocks are buzzing in trade on the back of fresh brokerage note coming in from Credit Suisse. Details lined up on the show. Bharat Forge is surging in trade after some positive commentary coming in from Chairman and MD Baba Kalyani at the CII Global Economic Policy Summit 2022. Key excerpts lined up. Dharmaj Corp Guard is higher in trade after the stock lists at a premium of 13%. Details on closing bell. And finally, we'll talk all things market. Vinay Jaisingh of JM Financial later on the show.
Okay, it's really hotting up now, all the action. Just take a look at some of these banks. Bank of Baroda is now up 6%. So it's a fresh leg of a rally that we're seeing. Axis Bank is at a fresh 52-week high as well. So there's no dearth of, big moves in the market at the moment. We have Mitesh Thakkar joining in. Mitesh, this was something we were discussing a while back as well as to whether there are more upsides left in the bank Nifty. And you did mention that one can continue to go long. At what point do you close your positions there? And on individual banks as well, what's the view? Also, if you can just give us, your closing strategies for the next 1 hour.
Yeah, sure. So one, I think the Bank Nifty has, done better than the Nifty even when it was correcting. The Bank Nifty was sideways. The Nifty was actually making slightly fresh lows every day in the last 3-4 sessions. The Bank Nifty, I think, did a range of about 43,400 to about 42,920. So that gives you minimum, and that's on the intraday charts, a minimum target of around 43,900 to begin with. But I suspect 44,500, 44,700 is the zone where the Bank Nifty could head towards. If you're taking long positions or if you have long positions, keep a stop at about 43,350, and these are spot levels on the Bank Nifty. And as long as that doesn't get, 43,320, and as long as that doesn't get violated, maintain a positive bias. I think one stock which I would want to comment upon, and disclaimer, I have it in my portfolio as well as I have trading positions over there on call option side, is Axis Bank. It's just broken into fresh highs, and after about a month of consolidation, this breakout has happened. So I'm looking at a 4-figure kind of a target in the near term for Axis Bank. That apart, on the PSU banking side, Bank of Baroda, etc., are looking very good. But what can possibly give a fresh breakout is State Bank of India if it starts getting past levels of 617, 18. And then I think I would look at a target of 650. Coming to my closing strategies, you were talking about Bharat Forge. That's a stock which has given a very interesting breakout. So that's on the buy list. Bharat Forge is a buy with a stop below 859 for targets of 900. And a buy on Coromandel Fertilizers. That's also given a very strong breakout. So that's a buy with a stop below 940 for targets of 1,010.
Okay, all right, Mitesh, thanks a lot for that. Well, the big space really today, we're talking about the banking pack, but the PSU banks, they are flying away in trade on the back of a couple of brokerage reports. Nimesh is with us to run us through those details. Nimesh?
Hi, Nigel. So as you rightly pointed out, the big buzzing sector is the PSU bank stocks, and it looks like the upgrades are pouring in for that particular sector. Last week there was Morgan Stanley who raised the PSU bank targets and estimates, and today we have Credit Suisse raising the target prices of many of the PSU bank stocks. In fact, they've gone ahead and upgraded Bank of India to overweight now from underweight, and they've raised the target price to 105 versus just 42 earlier. In fact, they have also raised the earnings estimate for Bank of India by 5 to 20%. In fact, Credit Suisse says that Bank of India has been seeing improvement in profitability with PPOP ROA up to 1.7%. In fact, the bank has also increased, NIMs have improved for Bank of India by 40 basis points in quarter on quarter, and that's likely to go up by another 50 basis points by FY24 versus FY22. So the NIMs are going to be quite strong. In fact, they're expecting ROA to improve to almost 10% in the next 1 year or so, and the valuations are still quite attractive at less than 0.7 times FY24 estimated price to book. So valuations are comfortable, and hence a big upgrade on Bank of India. In fact, they've also gone ahead and raised target price on SBI to 730 now, and Bank of Baroda to 220. If you look at the PSU Bank Index, that itself is up almost 71%. Y2D and all the PSU bank stocks, the likes of Canara Bank, Bob is up, in fact, up 122%. Canara Bank is up almost 100%. Union Bank is up almost more than 100%. So the entire basket has rallied pretty hard. but it looks like there is further upgrades coming in, and that's the reason why the entire sector is buzzing today.
Okay, further upgrades coming in. Let's get Devin Choksi of KR Choksi Securities into the conversation. Devin, the commentary from most of the PSU banks is that things have definitely improved, both on the asset quality side as well as loan growth is picking up. Private capex, government capex has picked up in a big way. But do you think a lot of it is now in the price? I mean, are you still comfortable with the valuations here for PSU banks? And if yes, what would your pick of the pack be now?
Yes, Sonia, good afternoon. Well, obviously, I think few things have started working in favor of PSU banks, and one among them definitely is the stronger balance sheets, I think, on the liability side. They have been able to acquire, I think, a higher amount of deposit at a lower cost. And this is working favorable in a situation when the credit offtake has started increasing. The traditional good hold of PSU banks, probably with, I think, some of the SME, MSME sector companies, is definitely, I think, helping them with the higher amount of credit offtake that they are experiencing. So that is positive, I think, as far as I think the growth outlook as well as I think the balance sheet management is concerned. More importantly, I think with the kind of assurance coming in form of, I think, continuity of the management, the previous problems, I think, which haunted these banks, I think, earlier, I think, with the new non-performing assets, I think this situation is also likely to be under control because of the continuity of the management. So, yes, I think there is a case for re-rating, and which is currently happening. Should they sustain the activity and the growth as far as I think the balance sheet building is concerned, then in my viewpoint, I think there is a case to remain invested into PSU banks. Maybe I think the rally is still continuing, and I think one should ride that rally.
Usually these stocks go into a 1 year, 2 year, 3 year kind of cycle, right? At what stage of the up move are we in when it comes to PSU banks? And another question, come Q3, suppose if the lending growth is very strong, but on the other side, we see NIMs moderate. Which one will the street focus on?
Well, I think at this point of time, I think the lending growth is likely to remain stronger. And I think the market is going to focus on this particular aspect because the lending growth has already started picking up in the corporate side. And I think the credit growth, which is basically, I think, from the corporate sector, which is, I think, in the region of around 16 to 18% at this point of time, is definitely, I think, far more higher than what we have seen in the recent past in earlier years. So certainly that is one area where market is going to be extremely comfortable. I don't think that at this point of time, I think the NIM is an issue as far as I think the bank's ability to earn is concerned. Because of higher amount of credit offtake, I think the companies are basically growing as well. And at the same time, I think the orders in the business coming in from the infrastructure side story, from the PLI side story, and also because of the increase in the requirement of working capital due to the high commodity prices, all in all put together, I think is asking for higher credit. So NIM is unlikely to, I think, spoil the entire momentum. The more important part is that one will have to keep looking at higher amount of credit growth continuing. Should that continue, then probably I think the case for investing into PSB will remain even more stronger.
Okay, all right. Well, let's move on to another stock, Sun Pharma, that's under some pressure. Regulatory headwinds for the company. Ekta standing by to run us through what the US FDA has to say with regard to its Halol facility. Ekta?
Thanks for that. Well, yes, definitely disappointing news which has come in for Sun Pharma because they have been issued an import alert at their Halol facility, which is based in Gujarat, implying that all future product shipments from this particular facility are subject to refusal of admission to the US market until these regulatory issues are basically resolved. Now, remember that this particular plant has already had a bit of a patchy history. This regulatory action comes after an inspection which had taken place earlier this year, where they were issued 10 observations, after which in August of 2022 they were issued an official action indicated status for this particular facility, which was basically a continuation of an OAI for this plant which was received by them in 2020. So the problems have been continuing, in terms of inspections as well as observations since pre-COVID levels around 2019. And remember that this particular plant at one point in time in around 2015 also had a warning letter. So there have been, it has had a patchy history when it comes to the US FDA. Now, in terms of this particular incident, there are 14 products which have been excluded from this particular import alert. The company has said that this particular plant is around 3% of their total US sales, including the 14 products. And if you exclude it, it would probably be lower according to analysts. And hence, maybe the impact financially wouldn't be less, but the larger impact is, yes, they do have a long road ahead when it comes to remediation. And also one of their other facilities, which is the Mohali plant, was also issued an OAI, official action indicated status, some time ago.
Okay, all right. Thanks a lot for that, Ekta. Well, Deven, what are you making of this piece of news, and what's the outlook on Sun Pharma?
So, Nigel, I think company has got seasoned with this kind of observations coming from US FDA in last so many years. In fact, most of the Indian generic companies have actually, I think, strengthened themselves. They have understood the subject, which is the requirement of the compliance from US FDA. Here in this case, I think the good practices, manufacturing practices, something which I think the US FDA is asking for. I'm sure I think that part is being addressed and I think being taken care of. Maybe I think initial news, we'll see market has to react, but I don't see too much of a fundamental issues, I think, as far as the business of the company is concerned. One of the most important point which I count in this particular company's case, along with Cipla, is I think their ability to produce the complex generic products, the specialty products. And that is where probably the company remains quite firm as far as I think global markets are concerned, along with margin and the supply. So from that point of view, I think this could be a continued journey. Maybe current fall in the price, I think if no serious further outcome comes in, could be a buy opportunity into the stock.
Okay, well, the other stock that I wanted to ask you about was Inox GFL. I mean, the entire Inox group, Deven, because we spoke to the management just a couple of hours ago, and they're taking some significant action to reduce debt on their group. They've even sold 2% of their promoter holding to raise about over 730 crores. Now, I know this group has not done very well in terms of returning, wealth to share or creating wealth for shareholders. But on this debt reduction plan, any thoughts and anything from this space that you like?
So, Sonia, I think since it is not the coverage, so won't be able to spell out particularly for the company. But in general, when we study the news, I think for such kind of development, we believe that I think anything which is basically bothering them as far as I think the debt is concerned, if that is taken care of, I think it makes a case for looking at those companies afresh. Won't be able to give specific view as far as this company is concerned.
Okay, Deven, do stay on. We've got more questions for you, but need to slip into a very short break. We'll also invite Vinay Jai Singh of JM Financial. Stay tuned.
Well, thanks for staying with us on NSE Closing Bell. For now, the Nifty is holding. It's recovered from the lows of trade and is holding with a gain of about 40-odd points. But it's the mid-cap index where all the action is. So let's take it from there. Bharat Forge is a stock on our radar right now. It's up almost about 4.5%, and volumes have picked up on Bharat Forge. This is after the management, Baba Kalyani, told CNBC-TV18 at an event that there are large defense and railway orders that they're securing. And in fact, they've been given a contract to supply artillery guns to Europe for the first time ever. Now remember, Bharat Forge has been doing a lot of groundwork in the defense sector. They've been setting up the infrastructure and they've just been waiting for orders to come through. And now they've got a big order from Europe for artillery guns. So that's a big positive for them. Let's listen into what the management told us.
There are pockets of opportunities where things are happening at a much faster pace. I'll give you the example of railways. The railways are undergoing some tremendous modernization. Just day before yesterday, a tender was out for 1,600 locomotives of 9,000 horsepower. Siemens was the lowest bidder, 20,000 crores. It is all supposed to be produced in India in an Indian plant. In one more week, there's a similar tender out for 9,000 horsepower locomotives, which is going to come out, and then 200 Vande Bharat trains, and then 100 high-speed trains. Now, this is the kind of initiative that Mr. Vaishnav has taken in his ministry to create industrialization of the railway manufacturing system which was somehow embedded in the last century for many, many years. And overnight, this is going to get completely modernized. What took Europe and America 50 years to do, India will do in 10 years. The first time ever in India, a private sector company has been given a contract to supply artillery guns to Europe. Never happened. Till about 3 years ago, we were importing artillery guns in this country.
All right. Well, that's a very optimistic Baba Kalyani. But let's talk about the stock now. Devin Choksi is still with us. Devin, if you map the trajectory of Bharat Forge for the last, say 1.5 years, it was stuck in this range between 750 to 800. It just never went anywhere. But now, since news flow has come through of picking up orders in defense and railways, the stock has started to move. Is it a good opportunity for the long-term investor?
So, Sonia, the company has always been having high potential and probably, I think, have always demonstrated their ability to supply the emerging areas. Now, in this case, I think defense and railways both. Fortunately, and rightly observed, so I think the recent quarters, one is also experiencing the financial performance coming along with. At this point of time, I think the company is showing the signs of growing upwards of 20% in coming quarters and the years now. So that is where probably I think this should be seen as an opportunity. Maybe I think the market was waiting for the sustainability of the growth, which it looks like I think we'll have because of the higher amount of orders coming in from two key segments, the railway and the defense. And that should possibly support the argument for 20% plus kind of a growth. I would think that I think there is a case for holding this company, and any correction in the price, I think a case for buying as well. The current valuations are reasonable. I am not saying that it is cheap, but it is reasonable. One can argue that if it is going to grow upwards of 20-25%, certainly I think one could add into the portfolio given the current valuations.
Okay, all right. By the way, just keep an eye out on Vadilal. The stock is up for you on the screen. We need to understand actually this piece of news in further detail, because as of the exchanges, they are saying that the company has approved purchase of Vadilal brand from Vadilal International Private Limited. As of now, I think that entity is a promoter-held entity. So the brand has been purchased. We'll have to see what's the outlook from here on. They're also talking about some non-core assets. So for the time being, the stock is reacting positively, but I think we need to look into this in a little bit more detail. So keep an eye out on that one. But Deven, I wanted your view on the cement space. And, before that, just listening to JK Lakshmi Cement, the stock hit a fresh 52-week high today. It's nearly more than doubled from the lows that it hit in May this year. Earlier today, we caught up with Mr. Arun Shukla, the president and director of the company. He gave us an outlook in terms of volumes, profitability, and the direction for the company by FY25. Let's hear about it.
Now, coming to the volume growth, till last quarter, we have grown in double digit. Our growth has been around 15% plus. And when we are going to close this year, I suppose that we are going to grow at a higher rate, higher than the industry. And we suppose we are going to have a growth of volume at around 15%. So, right now, we are at about, close to 800 rupees per ton, right? And our plan is to take it to, first milestone is to go to 1,000 level. And for that, we do have, plan. I told you that, we are working on top line. And parallelly, I think cost reduction in cost base, that is what is our focus area, along with the supply chain efficiency. So we are trying to reach to that, 1,000 rupees level. Our plan is to achieve this in the coming, maybe around 12 to 18 months time. I think that payout is going to be phased out, and in the interim, will be paying our debt also, right? So probably, I think, peak date is going to be about 12 to 1,300 crore.
All right, Deven, that's the management sounding very, very confident. Actually, Mr. Shukla took over just a few months ago, but he's managed to turn things around. And the street seems to be, liking what he has been saying, talking about higher focus on trade sales, higher focus on premium sales, as well as higher focus on profitability. But the stock is no longer cheap. I remember forever the stock was traded around $55, $60 per ton. It's trading at closer to around $100 per ton. Your view on the cement space and JK Lakshmi Cement, if at all?
So Nigel, I think we remain distinctly confident and positive about, I think, cement space in general, save and except some of the smaller companies in the southern pockets where they don't have the power to beat the cost as well as, I think, create the logistic advantage in their favor. But otherwise, the larger players like Ultratech, larger players like ACC and Ambuja, and I think some of the select pockets, I think also the players like Shree Cement and all, they remain, I think, distinctly positive players as far as I think the ability to produce higher amount of growth is concerned. Fortunately, with the infrastructure spending continuing in the economy, the demand side scenario remains intact, and on the contrary, I think it is promising to grow well. The last quarters have been, I think, slightly challenging because of the higher amount of input cost, but I believe that I think that is now under control. So hopefully in the third quarter, in the fourth quarter of the financial year, we should be seeing relatively better profit performance coming from the cement companies. We remain positive, and I think we like larger players like Ultratech and ICC Ambuja kind of players. We like them. Sheer volume ability that they would have to work in their favor going forward.
Okay, so prefer the larger cap cement name, but just look at the PSU bank stocks go. The Nifty PSU banking index is now up 3.7%. When we started the show, it was up 3%. J&K Bank, it's a mid-cap bank, but now for the week, it's up 32.5%. Karur Vysya Bank has spiked up. Indian Overseas Bank, IOB, is seeing buying interest for the week. That stock too is up close to about 9%. So there's no stopping the rally as of now as well. And things are just getting better and better for the PSU banks in terms of stock price gain. Even the other pocket of strength over the last couple of days has been fertilizer. So take a look at something like FACT. Up today, up 17% for the week. Madras Fert has rallied 20% for the week. What is the news that's driving these stocks higher? Is it just expectation that the Rabi sowing, that season is going to be strong and therefore demand will pick up? Or is there something else that the market is latching on to?
So my understanding, Rima, is I think the input costs coming under control. And as we all know, I think the petrochemical base input cost, I think, which requires to come under control. And that is what has started happening with the crude oil prices remaining under check. Given that kind of a situation, I think some of the users, I think, would be benefited out of this, and fertilizer being one of them. So I think that could be one of the reasons for which market remaining slightly excited. At the same time, ahead of budget months, I think you definitely see more actions in the likes of fertilizer stocks, likes of railway stocks, and I think that continues. But in my viewpoint, I think it is more of the cost pressure which they have been able to meet now. That is where possibly some amount of falling has started happening into fertilizer companies.
Okay, Devin, pleasure speaking with you. Thank you very much for joining in. Have a very good day. Vinay Jaising, the MD of Portfolio Management Services at JM Financial now is also joining in. Vinay, your view for the markets in 2023 is the first half may be a difficult terrain to navigate for global equities. India is likely to outperform. What's the best way to play then this first half? Is it go long on domestic names, avoid the exports? Tell us the 6-month view first.
Sure, thanks for the opportunity. First, the way we look at it, the India resurgence story, as you can see in the loan book growth of 17% year on year, makes the private banks and some public sector banks a must to own. So that's where we need to be overweight. And the second space where we need to be overweight is the Make in India story. Make in India story emanates from a couple of spaces. One is specialty chemicals, the other is contract manufacturing, and the third is manufacturing, be it an auto or otherwise, wherein India is becoming a source for them and where we are earning dollars and the cost is in terms of rupees. So these are the two spaces where we would be overweight in the first half of the year.
So just to take that forward, Vinay, you said manufacturing including autos, but you just want to understand which are the pockets that you like. Because if you go through the data with a fine-tooth comb, you'll realize that a lot of pockets are actually seeing pressure. There's, of course, two-wheelers that have not recovered yet. Even in the larger guys, right? I mean, if you look at Maruti's numbers, for example, the last 3 months in November, they did about 1.5 lakhs of wholesale sales compared to they were at about 1.8 lakhs in September. So month on month, it's actually a fall that they've seen. So where are you seeing pockets where there is a high degree of outperformance in autos?
Sure, thank you. So auto ancillaries, companies like Craftsman, companies like Escorts, which are going to become the tractor hub for the world coming in from India. These are the two spaces where we are most excited about. Obviously, if you want to play the FMCG chain, Maruti, but Maruti for us is now getting closer to fully valued. We do have it in our portfolio though.
Okay, all right. Hi, Vinay. Vinay, I want to ask you about a couple of these chemical names. Gujarat Fluoro and Sumitomo Chemicals. I think you're positive on both those two names. Tell us more.
Sure. So as far as Gujarat Fluoro is concerned, the story for us is pretty simple. There's been a change in management, focuses on the product which we like, which is the fluorine chain. And even in the fluorine chain, it is in the specialty chemical part of the fluorine chain. If you were to look at valuations for Gujarat Fluoro, they're trading at 25, 26 times 1 year forward as compared to its peers, which are trading at close to 40 times. So that makes it a favorite for us. Good earnings growth, good product profile, and good exposure to global markets. Looking at Sumitomo, again, it's part of our Make in India story, wherein the parent Sumitomo from Japan is getting it orders, export orders coming in from US, and India is becoming a hub for production. Today, exports are accounting for about under 20% of overall sales for Sumitomo. And that number, our analyst Sudarshan tells us, should go to as much as 40% in the next 2 to 3 years. Earnings visibility here, again, for us is north of 25 to 30% year on year as far as bottom line is concerned, which is why we like Sumitomo as well.
You said you like specialty chemicals as a Make in India theme, right, Vinay? How does China reopening change this or impact specialty chemicals?
So, couple of things. First, we all are aware that, the Make in India story is China plus one, put in different words. So China opening will increase the demand for China, and also where the product availability were not there for a couple of these specialty chemical companies, that would improve. But the way we are looking at specialty chemicals, and you mentioned a couple of the names earlier, I would add one Archean Chemicals to that, is if the raw material is more so based in India, and you can avoid buying raw material for China, the story gets even better. So for us, reopening of China is more a demand growth story and better supply stocks. But we are not buying those companies wherein there is any raw material or a large portion of raw material coming in from China. So it won't make an impact to us, but to the entire specialty chemical space, it would be a lot more positive.
There's so much happening in defense, aerospace, railways, right? I mean, we were just hearing from Baba Kalyani as to how Bharat Forge has now finally secured a big artillery guns order in Europe. And of course, defense stocks back home have been on a tear as well, BEL, etc. Do you still like these names, or do you think that the best is over in terms of a stock price move?
Sure. See, for us, again, I'm harping on the Make in India story. And, the previous speech you had from Baba Kalyani, India is also becoming a hub, if not for export market, at least for replacing what was coming into the rest of the country for the defense. The company we like out here is Hindustan Aeronautics in the airport space. What's very important out here is, with Tejas, which them doing so much of maintenance work for engines of a couple of Russian engines which are coming up for renewal as far as India is concerned. That makes us believe that the short-term story, which is the next 2 years earnings growth profile for companies like Hindustan Aeronautics, is 10 to 12%. But as you move from 2024 onwards, exports would become a big pie for it, and the earnings trajectory could move from 10 to 12 to probably 14 to 15%.
Okay, all right. Vinay, I wanted to ask you about the headline index. Everyone's talking about the Nifty being expensive at around 22 times odd. What kind of an earnings growth are you factoring in, point number one? And are you in the camp that believes we are expensive at current levels? What's the downside risk then?
Sure. Thank you, Nigel. It's a tricky question because, today, obviously, we are at an all-time high. That's one way of looking at it. The other way of looking at it is we are about 100% premium to emerging market and about 50% premium to MSCI World. That makes us on a relative basis expensive, but as our earnings trajectory has shown, our resilience to earnings is pretty solid. And on a one-year basis, since the Indian markets have gone nowhere to 5 to 6%, and the currency has depreciated by about 8 to 10%, for a global investor, we've not made much money. So time value of money for the Indian market for a year, despite a growth of 15 to 16%, has been zero. So on an absolute basis, we've lost 1 year of value. Having said that, our earnings growth we are seeing is 15 to 16% forward CAGR from this year to 2023 to 2024. So we see the EPS of 810 moving up to even 1,100 levels for F25. So if I were to talk to you 1 year forward, therein, we would be looking at a rolling EPS of somewhere close to 1,050 to 1,060. If I use the average 5-year multiple of 20, a 21,000 index on a base cases cannot be forgotten for next year. Put the other way around on your second question on the bear case. If you use the same multiple of about earnings of about 1,060 and take a multiple of 16, which was the last 10-year average, we can visit 17,000 levels. So next year for us would be, more a trading zone of 17,000 to 21,000, but with the first half of the year being a lot more attractive when the world has so many headwinds.
Vinay, thank you very much for joining in. That's Vinay Jaisingh of JM Financial. Let's get into a very short break on that note. We'll come back and get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also tell you what you can buy today, sell tomorrow, calls from our technical experts. Welcome back. 18,600 on the Nifty. We're up 40 points. The Sensex has gained 135 points. It's broadly been a very quiet, listless session, but now things appear to be picking up. It's also the weekly options expiry, so the last 30 minutes are going to be crucial. Right now, as we speak, Infosys, I think, has moved to the high point of the day, so that's up close to about 1%. It's outperforming the rest of the IT basket. IndusInd Bank, Axis Bank have been fairly strong. ICICI Bank, too, is trying to outperform. ICICI Bank has a gain of nearly 1%. But let's talk about some trades, perhaps what you can buy today that you can sell tomorrow, or a reverse trade. Mitesh Thakkar is with us. Mitesh, how do you expect the day to close? 20 minutes to go and your trades?
No, I think the day isn't closing badly. I would want on an intraday basis 18,630 to be taken out. I think it might not happen today, but if it happens tomorrow, then we might see further momentum. But otherwise, it's a market which is consolidating at higher levels, so no worries there. I have a BTST on NMDC. That's a BTST with a stop just below levels of 122.80 and a target of around 126.5, 127 for tomorrow. And the other one is crude effect on Indigo. I think that's near the day's high. It's moved up very nicely today. So that's a BTST as well. Keep a stop below levels of 2,000 for targets of around 2040 for tomorrow.
Okay, all right. Thanks a lot for that, Mitesh. Well, it's that time of the day where we turn our attention to D Street Chatter. Nimesh is with us. Nimesh, what's going on? It appears like a fairly good session. The Nifty is holding higher. The Nifty Bank, that's flying away. And the breadth of the market is decent. What are you picking up?
So, again, Nigel, after a few days of consolidation, again, back to 18,600 levels. And the good part is it's led by financials. And that's been the consistent feedback, right, for the last many days, that there has been buying in the financial stocks. Maybe within that, there is a rotation happening from the large institutions. But PSU banks, small private bank stocks, all are getting bought by the large institutions. And that's now playing out in the PSU bank basket as well. The bank index is up 1%, but big moves in the PSU bank stocks. We saw today Credit Suisse upgrading Bank of India and a couple of other PSU bank stocks as well. And even Morgan Stanley last week had done this. So that's where the consensus seems to be that for the time being, there is momentum to be chased. And that's in the financial names, whether it's private banks, whether it's PSU stocks, or for that matter, the smaller bank stocks. I guess, for banks, what we are missing out is the fact that at the macro level, the lower crude prices is going to help India macros, and that's where banks do benefit, right? So that's also a proxy play and why you're seeing a big surge in the bank stocks in the last few days, and in the case today as well. The good part is there is a bit of participation back from the broader markets as well, and that's been the feedback, right? There is selective buying in the smaller and the mid-cap stocks, and they tend to outperform in the month of December. So that's also playing out to some extent in today's trade. The mid-cap index is up 0.5%. But flows point of view, again, it's very, very selective buying. There is no big basket or a big directional trend, so to speak. The trend seems to be only in the financials. But outside financial, it's very selective buying happening from the larger institutions.
Okay, all right, Nimesh, let's get to stock-specific action then. What are you picking up?
So as I said, the big theme is financial. So the first stock in that list today is Bandhan Bank. We saw a big correction on the stock after the quarter two numbers, and from lower levels, you're seeing a bit of consistent buying back. So that is one stock where you're going to see high delivery as well in today's trade, because there is a good amount of buying interest back at the FI test. So that's the first one. The second stock is Macrotech Developers, Loda. They announced a QIP last evening, and the stock is up 2% despite a 5% discount to the QIP issue. The fact is, the stock is buzzing largely because what I understand, the demand is quite strong in the QIP, and some big marquee names are going to be seen, buying into the QIP in Loda, and hence that stock is buzzing in trade today. And the last stock is Kotak Mahindra Bank. Only in the closing bell we saw there was a flash of 0.1% equity changing hands. So there has been selling from a leading FI in Kotak Mahindra Bank, but also there is a very strong buzz that a large block can come in Kotak Bank, and hence that stock is under pressure, despite the fact that the banking index is buzzing in trade. Kotak Bank is down largely because of selling pressure and some anticipation or buzz of a large block deal coming soon in Kotak Bank.
Okay, thanks a lot for that. A large block deal in Kotak Bank, perhaps. It's really banks all the way. Nimesh, thanks for giving us an insight. Let's get Ambrish Baliga into this discussion. Ambrish, exciting times for the bank Nifty. I mean, the index itself is at a record high, and there are large block deals perhaps in some of these bigger names. What's your pick of the pack here, and what is your prognosis? I mean, do you see further upsides despite the rally that we've seen already?
Good afternoon, Sonia. Yeah, I mean, clearly sector rotation is happening, and now after the PSU bank run-up, we have seen some of the smaller private sector banks doing extremely well. I mean, so small like South Indian Bank has nearly doubled. Karur Vysya Bank has got up nearly 150% in the last couple of months. IDFC has moved up more than 50-60%. So I think these are the ones which will continue to move up some more. Karur Vysya could move to levels, say, about of 120, 125. South Indian Bank can possibly move to levels of about 2022. But then, I mean, at these levels, clearly, I mean, I'm finding it slightly expensive. So we'll not really buy fresh into PSU banks or some of these private sector banks. Would in fact look at booking out to a certain extent.
Ambrish, afternoon. Any stock idea that you have for us?
Yes, stock idea is there again from the BFSI space, but not bank. This is SBI Cards. Look, I mean, basically with a very strong parentage, SBI Cards is the second largest credit card issuer in India with about 19% market share. And SBI's vast distribution and customer network has actually helped them market their credit cards. If you look at Q2, the numbers were good, with the new accounts increasing about 36% Y-on-Y. Spends have increased by about 43%. PAT has gone up by about 52%. And the asset quality is quite decent. Net NPA is about 0.78%. And looking at Q3, the result should be coming in January. Should really be good because of the festive season which was there. And linking of RuPay credit card to UPI, I think this should also boost the company's financial performance in the longer term. And the management actually expects the e-commerce transactions to increase by about 25-30% CAGR over the next 5 years. And digital payments are expected to account for nearly 65% of the revenue by 2026. So this again should be improving margins. So looking at an EPS of about 28 for FY24, I mean, I have a target of 1064. Which is about 38x, and that's about 8.5x FY24 book value.
All right, Amrish, normally when you join us, you give us, a couple of picks. What else do you have for us today?
No, in fact, at this point of time, I'm in fact looking at booking out more to a certain extent than really buying. So my ratio of selling to buying is about 70-30 or 80-20. In fact, for every 100 rupees of transaction, I sell 70 rupees worth and buy only 30 rupees worth. And one of those buys is the one which I told you is like SBI Cards.
Okay, go ahead. So on SBI Cards, what are you looking at in terms of a price or an upside?
Like I said, my target is about 1064.
Okay.
But again, this is slightly longer term. It's about 9 months to 12 months.
Okay, 1064. Got that. The other stock that we're looking at this afternoon is Dharmaj Crop Guard. It's much higher in trade. It listed at a premium of 12.5%. And now I think 14% higher. Sonal is here with more details. Sonal, over to you. Yes, that's right. Strong debut for Dharmaj Crop Guard, and that was driven by a 12% gain that we saw on the listing price as well. And if we look at the current valuations for the company, at this stock price, the stock is trading as 32 times of 1 year trailing earnings, that is FY22 earnings, that is. And if we compare it with its peers as well, the likes of India Pesticides, Hiranba, you have Rallis, it is actually on the higher end. India Pesticides trades at 18.5 times, Hiranba at just 11 times, Rallis is 27.5 times, and this price right now for Dharmaj is much higher than its peers as well. The company is an agrochemical company which is into manufacturing, distributing and marketing of various types of agrochemicals, be it insecticides, herbicides, microfertilizers and antibiotic as well, and has a substantial export base as well, exports these products to 25 countries in Latin America, East African countries, Middle East as well as Far East Asia. The company's performance has been good as far as financials are concerned. They did revenues of 200 crore rupees in FY20, and in 3 months of FY23 they've already done 220 crores of revenues. Margins have been increasing from 9% in FY20 to 12.2% right now. Profits have also been increasing for the company, and that is one of the reasons why this particular IPO also saw strong subscription, and that is something that can be seen in the stock price as well right now. The fundamentals have been strong, and that's why the stock is higher in trade today as well.
Thank you very much, Sonal, for that. Ambrish, any thoughts on Dharmaj Crop Guard or its peers like Rallis? Is that a space that's looking attractive to you? You're on mute.
Yeah, am I audible?
Yes, go ahead.
Yeah. Rallies, in fact, I have suggested quite much earlier, closer to levels of about 190, 200. So here I think it's more or less fully priced. Maybe either 5-10% more I would start selling Rallies. UPL is the only one which I'll possibly hold on for a while. Dharmaj, I think, is more or less fully priced, and the way it has listed doesn't really give me that confidence that it can move up much more from here. I think we should see selling coming in from those who are allotted in the IPO. So at these levels, surely it's not a buy.
Okay, all right. It's not a buy at these levels. We have just about 10 minutes left for the day to end, and it will end with a mild green tick, about 0.2%, so that it's largely been a range-bound day. We'll get to more market talk in just a bit, so take a quick break and be back.
Welcome back. Nifty still consolidating in that band, but the Nifty bank, that's the one that's showing the big outperformance today, and the breadth of the market as well looking quite good. But in this sort of a positive backdrop, we have a couple of stocks that are not doing too well. India Builds Housing Finance, well, that's under some pressure. Let's get a view from Ambrish Palika. Ambrish, I recall the stock at more than 1,000 rupees and part of the Nifty. Well, it's at around 140 rupees odd. What's your sense on it?
It can still go down further, much more from here. Again, been an issue with corporate governance all through. So even at these levels, I will not really look at buying it. If one wants to buy into housing finance, clearly HDFC is a much better bet. Even something like a LIC housing, which had corrected in between because of the earnings, I think even that can be looked at, but surely not India Bulls.
Okay. Okay, well, thanks a lot for that, Ambrish. Let's also get you some more market opinion. For the last 27 years, Motilal Oswal has been putting out their annual wealth creation study. Each year, they tell us a new way to identify winning stocks, and this year, their study tells us to classify all stocks into consistent and volatile. For more on this year's lesson, earlier today, we caught up with the man himself, Ramdev Agarwal, to put more light on the same. Listen into what he had to say.
Everything is not cyclicals. So we said, let's look at the consistents. Okay. And we defined consistent. What is consistent? Like a predictable company, predictable and unpredictable company. So predictable is what? The companies, this is our definition. You can have your own definition. But predictable companies are the companies whose earnings, because stocks are slaves of earnings power. So earnings are consistent in the sense that year after year, either it is same or little higher. The epitome of consistency is HDFC Bank. In last 25 years, there is not a break, whether it is a GFC, whether it is a COVID
or taper
minimum growth. Minimum growth is 17%. It looks very unreal, but that's the classic. Character of the company has to be consistent, and that gives predictability. And the moment the market is about jo dikta hai wo bikta hai. So, you know, as the predictability comes, the valuation of the company keeps rising. And that's why we are not able to explain very modest growth of 10-15% and a lot of this FMCG and all, but they are consistent. But their multiples are running into 75, 80,
because
85.
they're predictable.
Because they are predictable. And then you can, then maybe market is predicting a lot longer than what should be done. I mean, what we are used to. Maybe in all the 70-80 P multiple companies, market is saying, okay, last 25 years has been very good. The next 25 also looks to be as good.
Okay, that's the word coming in from Ramdev Agarwal. There's an update on your screen about Ashok Leyland. They've appointed Shenu Agarwal as the Managing Director and Chief Executive Officer. Now, Shenu Agarwal was the Chief Executive Officer of the Escorts Agri-Machinery business for the last 8 years, and now they've moved to Ashok Leyland. So that perhaps, that's the latest update on the corporate side coming in for Ashok Leyland. But let's try and just count down to what has been a very quiet day of trade. At the end of the day, although the Nifty recovered from the lows, it will end around that 18,600 mark. So it's a gain of about 40 odd points that you're seeing on the Nifty. It's largely been range bound. Those jagged edges is what you can see through the day, but it's been in a very tight range between 18,400 and 18,650 or so. In terms of individual stocks, just some final comments. Banks, of course, it was, the piece that worked the most today, and the Bank Nifty ended at a record high. So that was the big takeaway for today. Axis Bank, IndusInd Bank are all big winners today, followed by L&T, which hit a fresh 52-week high as well. Eicher Motors, on the back of starting their Brazil unit, was up almost about 2%. And then you had some of these names from the technology space, Infosys, that did quite well. SBI, M&M, Adani Enterprises were a couple of other gainers today. On the losing end, it was the pharmaceutical space that really gave up most of its gains. Sun Pharma, Divi's Laboratories was in the red. And then you had IT stocks. So TCS, Wipro were also in the red. ITC, Nestle, Apollo Hospitals were a couple of other stocks that ended with a bit of losses today. Nothing alarming. Largely, you'd have to say, apart from the Bank Nifty that was, really stood out today with a record high, it was a nothing sort of a day for the market.
Absolutely. But just take a look at the mid-cap index, right? The low on the mid-cap index was about 1040. If you can get that intraday chart. And from there, it recovered close to about 230 points from the day's low to end higher by nearly 200 points. So there was some strength that we saw in the mid-cap index, and the advanced decline ratio ends up in favor of the gaining side. Well, it's all about these banking names. Central Bank of India up 15%, Punjab and Sindh up 10%, Karur Vysya, J&K Bank, Bank of India, where there was that Credit Suisse upgrade as well. These stocks saw rallies between 8 to 9%. Apart from that, there was strength in the fertilizer names. So Madras Fert 6.2, FACT up close to about 5%. JK Lakshmi Cement, where the management guided for double-digit volume growth, a pickup in their EBITDA from the current 800 rupees to 1,000 rupees in the next 12 to 18 months, inched higher in good volumes. NCC also up 4.5%. The sharp decline in crude prices also resulted in gains coming in for aviation names. So Interglobe Aviation was up close to about 2.5%, and Lodha QIP was there. The news of QIP, 3,500 crore rupee QIP, but the stock was up and about in trade. A couple of losers include Bajaj Hindustan, Triveni, Easy Trip, Ircon. Ircon has had a fantastic run over the last couple of days, but they came in for some amount of profit booking. Nigel.
Well, that's right. From the broader markets, a couple of stocks that we don't talk about very often. Simplex Infra, the stock was up close to around 16% in trade, so that one was buzzing around. Sagar Cements, well, that one's been seeing some traction. It went down all the way to around 170 and it's bounced back fairly well. So that one was up and about in trade today, up 6.5%. Purvankara as well, that's fallen from grace, but in today's session, well, that bounced back in trade. And Everready was another one that did pretty well. We had a BSE announcement that came late in the day on Vadilal. And the street liked it seems. I mean, the read-through was a little bit confusing, but for the time being, the street reacted positively. The stock was up close to around 3.5%. So to wind things down, it was a good trading session. The Nifty managed to end above that 18,600 odd mark. I would say the Nifty still in consolidation mode, but the Nifty Bank, the PSU banking index, both of them broke up. And you had the breadth of the market that was fairly good. So the mid and the small cap indices did far better. Well, on that note, we'll have to wrap up on this edition of Closing Bell, but you don't go anywhere. Our Thursday special, Big Deal, comes up next.